Bracing for Greece, world markets and governments on edge as the countdown to Sunday's election in Greece closes in. The big fear chaos will break out if Greece picks a leader who wants to break out of the EU. So if the vote goes that way, will a massive financial meltdown be on the way? Hi, everybody. I'm Lori Rothman in for Brenda Butner, and this is Bulls and Bears. The Bulls and Bears this week, Tobin Smith, Jonas Max Ferris, Gary B. Smith, along with Todd Schoenberger and Susan Knox. Welcome all. Todd, we'll start with you. You worried?
Absolutely. I got to tell you, Lori, this vote is not going to go the way that we, Wall Street, Main Street, anybody around the globe wants to hear. This is going to be a horrific moment, not just for the United States economy, but for the overall global economy. And everybody in Main Street right here, USA, has to be vitally concerned with what takes place in Greece tomorrow.
Gary, you think the U.S. will see an impact from the outcome of the vote?
Zero. Yeah. I mean, let's look at I hate to burst Todd's bubble, but we've had a million of these horrible Greek moments over the last 2 years, 3 years, as far as I know. Look, Jamie Dimon said the impact of a Greek default, if it goes that way, on our financial system would be zero. I take his word for it. But even closer to home, are people that, let's just say they elect this government, they default, they pull out of the euro, all the worst thing that can happen. Are people going to buy any less iPads? Are they going to stop going to McDonald's? Heck, they're going to keep going to McDonald's in Greece, only they're going to pay with drachmas or something like that.
You mentioned
there won't
McDonald's.
be any impact, nothing to worry about.
Gary B., let me send this one over to Susan. McDonald's, Nike, Coca-Cola, all these U.S. multinationals that depend so much on their overseas business. I mean, they're likely to rein in if there's more turmoil in Europe. What do you think?
But it's important to keep it in perspective. So the U.S. economy, I'm actually with Gary, the U.S. economy is not driven by exports. And we only export 10% of our GDP is only attributed to 10% of our exports. So we need to make sure that we're understanding how much is really attributable to exports versus other, consumption, domestic consumption-driven demand. And when you think about the percentage of our exports that comes from Europe, including Great Britain, it's only like 2%. So it really, it could be a much smaller ripple.
Let me get Jonas to weigh in. We haven't heard from him yet.
Okay, these are all great points if people were rational, but in a real panic, they don't really care about how our exports are to Greece because the last few collapses we've had of country, when Soviet Union or Russia defaulted on a little bit of debt, that was a big deal in the financial markets and the economy. The Asian contagions, I believe, started with a taxi company defaulting on some debt. Like, it doesn't take a lot to cause a worldwide panic, but we've written off Greece at this point. It would have to spread into the other countries. The U.S. economy is still weak right now. It's not in a recession, but it's weak. We can't take the entire European euro area going into a very deep recession just versus the mild recession they're already in. So we don't want this to get a lot worse. It could hurt America.
Toby, we see these pictures of the turmoil and the unrest in Greece and spreading around Europe. I mean, here in the U.S., we're looking at that. We're nervous, and sentiment so much drives the market.
Sure, absolutely. Not only just sentiment, just behavior. We saw sales down 0.2%, annualized. That's 2%. We saw Starbucks coming out, and obviously companies that have European exposure are having serious problems. And, we're having a bank run in Greece. I mean, that's clear. That's a panic. The next thing that's going to happen is that there's going to be a panic when, I guess, my friend Todd here is a soothsayer, and he knows that the vote is going to go against Europe. But let's just assume Todd, the soothsayer, is wrong. The vote doesn't solve any of the problems. What Americans are seeing is they're seeing their level of uncertainty compounded by this other sort of country called Europe that they understand is going to have real problems, and they're sitting on their hands more. They're stopping behaviors that they were doing. And Gary, that is the psychological point, and we're seeing it right now. I mean, you can't deny these numbers are bad.
Toby, let me explain something to you guys, okay? Look, we are back to 2008, and this is what's going to happen. You guys are actually making out Greece as if it's some type of a small problem. It's a huge problem.
It is!
Spillover effect. Look,
it's
Spain,
Maryland,
France,
for crying out
Portugal.
loud.
Oh, come on. You guys are looking at the size of the country, and that's it. Let me tell you something. The number one customer for China right now is Europe.
Look,
Europe goes down. China's not there to buy our treasury.
What about this perspective, guys? The wall of worry. Let's get Susan in on this one. You mentioned uncertainty and not knowing the next step. We've been following the European sovereign debt crisis for years now, but this is a crucial vote this weekend. So, Susan, what do you think if we get a little bit of certainty about what's ultimately going to happen with Europe? Maybe you disagree we won't really get that now, but we will get a little more clarity, and that's got to help sentiment and the markets back here in the U.S.
I absolutely think it will help. And look, the biggest problem about this is not going to be the direct economic impact. It's the fear and uncertainty. And so I don't disagree with that point, the psychology of the markets. And you can talk markets down, and I think that's a little bit what's happening right now, is that people are putting so much pressure on what's going on in Greece right now that people feel like this is a make or break moment. I do think, though, that in general, we know markets like certainty. And if we have a little bit of certainty of what is going to happen with Greece going forward, that it can start to calm some fears. And one other point that I think is really important is that the European Central Bank and the other bankers are really making a strong push to show that they are ready to backstop liquidity. Because if you have a liquidity crisis, that can lead to a credit crisis, and then you get into a real recession.
Toby, what happens to the markets on Monday?
Well, soothsayer Todd, he was right that we're going to be down for about a minute, using Gary's old line. And then you're going to hear the da-da, the Federal Reserve, the ECB, the OEG. They're all going to be in with the tap of money that makes our TARP tap look like a little lemonade stand, for crying out loud.
Can I make a point about this whole fear and uncertainty? Thank you. First of all, look, Jonas makes a good point. Perception is everything. Unfortunately, if you walked out there to 6th Avenue and asked the average person, he'd say they're having another important vote. Haven't they had 270 important votes? Haven't they defaulted already? The average person out there is going to say, huh? Greece? Haven't we been through that 900 times? Like Rocky 8, for crying out loud. We've lived it. We've done it. We've been there.
Gary, I will tell you this. As the euro goes down and everything else goes, you're going to see about 8 million Greek vacations booked on Monday because the price is going to be lower than going to New Jersey, for crying out loud.
This is like so you're saying that could be a benefit, Toby, huh? So we'll want to take some Greek vacations, cheaper euro, but what if the drachma comes into play? What will that do to the dollar? Does it strengthen the dollar? And that could weigh on the stock market.
Is going to be
and that could hurt our 401k plan.
Its own little currency that's going to say 100 drachmas on it. We'll sell for 50 drachmas.
Listen.
And that's going to be an
Here's what you want to know, Toby. Okay, take McDonald's. Lori, you brought it up earlier. 40% of their revenues come from the euro region. Europe implodes. That means 401k. 401k accounts are down because McDonald's is down.
It's a widely held stock.
The rest of the market down. Come on, Gary B, you got to agree with me on this.
So what Todd's saying is if the vote on Monday goes the wrong way, everyone headed into that McDonald's will go, oh, that's it. No cheeseburgers. I'm not buying fries. Forget it.
Yeah, exactly. Only 160 now.
They're not going to supersize it, that's for sure.
Jonas, how much of a U.S. slowdown do you think is going to happen here if Greece does leave the European Monetary Union?
If it unravels badly, it will cause another recession here, but it has to unravel badly. It's not the consumers. I'm worried. The consumers going to McDonald's isn't the problem. These panics always start with investors, the smart people. They're always like the big money, piling out of a market and trying to get out of it in 24 hours. That's what causes a panic, leads to collapse in asset prices, and then leads to recessions ultimately happening in countries. So, again, the McDonald's consumer in Greece is not the problem here. It's does this death spiral and then cause a recession in those countries that's so bad it drags us down with it.
Well,
it's a small
think about
risk.
where those assets are coming.
The smart money
is like here.
The smart money is like a bulldog in a butcher shop right now, guys. I'm telling you.
Let's Susan finish your point.
No, I'm just saying we're the safe haven right now, right? The flights are quality is coming to us.
Yeah, it's a good thing for us in the long run. If Greece falls apart,
and a bulldog in a butcher shop has nothing to do with Greece. I'm sorry, Todd.
The smart money is salivating at this, guys. I'm telling you, this market's going to plummet on Monday.
Oh my gosh, we got a lot of different
There's a Del Frisco steak dinner bet right there.
There you go.
All right, we'll go to